Phoenix real estate market. As always, if you ever want to look at the interactive graphs, you can click this. Also at the bottom, you can click to get down to them. Here's the big story. We got the data for September, and you can see it's 475, and this is for non-distressed single-family houses. So it fell $40,000 in 4 months. And what's just drawing this line out, it's maybe December or January. We're going to be at prices that were the same as 12 months earlier. So I think what's going to happen is that's going to be the storyline, is that prices are the same or less than they were a year ago, and that kind of changes the sense of urgency on buying when that happens. Here's a podcast interview I did. It's pretty cool. So check it out. Check out Mike's web channel. He's targeting investors, but he's not one of those investor guys who is like everything is awesome all the time. He uh, he can look at downside risk as well. Now, this is one of the key things that's going on in the market right now. This is looking at from 2014 to 2022, and we're down to the number of newly accepted contracts is below any year from 2014 on. So you would think that that would be bad, except it's offset by another thing is that new listings that are hitting the market weekly are also very low. This last week is always updated, goes up. But nevertheless, you can see that this is what happened in the summer. We had a very low new accepted contracts and sales, but we had a huge number of homes hitting the market. But now they're low. They're kind of a match almost. So that's why we're not seeing a huge skyrocketing in inventory anymore. So what's driving the market? It's obviously the interest rates. Here's a way I put it together on my other website. $1,000 if you have $1,000 principal and interest mortgage payment, how much money can you borrow? It was almost like 250 now. It's like it's almost come down almost 100,000. So that's what's causing it. And you can see what happened. This is the interest rate down here. So, but you can see that did not happen back last time in 2008. It went up a little bit, but here it's skyrocketing, and that's causing this effect where if you buy a home, it's more expensive because of the interest rate. But if you sell it, you lose the interest rate you have now. For you're down at 3% or whatever, so you lose that. So that's something we did not have that kind of effect going on back here in 2005, 2006, 2007. So that is something different. And thank goodness. Otherwise, we could have been in a situation like we had back then, where there was huge number of houses hitting the market. Also, the other thing was not just the interest rates; was there was a style of investing, or investors would just buy it and hold them for a few months and then sell the house. Now it seems like a lot of people are more investors that are renting them out because rents were so high, so they're not going to put it on the market. People tend not to sell homes that have a renter in them. They get less money generally if there's a renter in a house than if it's a vacant. And here's a really interesting thing. This is something I'm worried about is rents. What's going to happen to rents? But this is building permits. This is just from the Cromford report. You just updated this, and it's showing this is for single-family houses, and this is for Maricopa and Pinal counties combined. And you can see there the building permits are coming down. And what Mike was saying is that, hey, that's not what happened last time. Last time it took the new home builders a long time to adjust, and now it seems like they're adjusting or starting to adjust more quickly. On the other hand, Mike also pointed out that this is multifamily. Multifamily is setting records. There's a ton of multifamily permits out there, which could be bad for rents. So Mike R. the Confer report was saying that this is the highest ever recorded in the uh, multifamily permits, and it's like 36% higher than it was a year ago. So there might be a problem with rents there. Here's more on rents. You can click on this article to see the full article, but it's showing that Phoenix is particularly soft as far as rents go nationally. In fact, he said, well, cooling off is too strong a word to describe the national rental market. It appears to be an accurate description of Phoenix. So Phoenix is cooling off. Okay, here's some tweets I have. This is Ali Wolf, who's always good. They do they sell economic analysis to new home builders. You can't see it right here, but Phoenix is on here. If you click there, you can see the Phoenix. But Phoenix new home sales are way down. And this is Phoenix evictions. Evictions are trending up, solid trend. So that more evictions would be more places to rent, or will go up for rent because they're being evicted. They were kind of locked out. They weren't being evicted during the pandemic, and now they're starting to get back to normal. I think actually they're above normal, the evictions. Catherine Rieger of the Arizona Republic has got a good article here you might want to check out. And here's an interesting factoid from the University of Arizona that going in 7.6% of people worked primarily at home in 2019, and now it's 20.7% in 2021. Well, that's a year ago. Great. I hope you found this useful. Take care, everyone.